Well, good day all. Ira Epstein of Linn and Associates with your metals market update for this Monday, July 15th, 2019, getting on at 4:10 p.m. Central Daylight Time. A nice strong day. The last quotes in silver, by the way, were 1441 to 42, right near the day's high, as gold was up much higher than this too. These markets got a spark right at the end of the day. So if they follow through, I'd expect them to be a bit higher on the reopening at 5 p.m. tonight. The dollar up 12, most currencies down a little bit. If you saw Steve Mnuchin, our Treasury Secretary today, he did hold a news conference, and in it, I don't think he could have been any clearer. If you're thinking these cryptocurrencies are going to be anytime approved by the U.S. Treasury, I think you have another thing coming. I think that what Facebook did when it announced Libra is it opened up Pandora's box, and in that Pandora's box, and somebody has to do it anyways, the question is, are we ready to make these Bitcoins follow everything that the governments want them to follow? Let me give you the first thing. Who owns them? Isn't part of owning a cryptocurrency nobody knows who owns it? I think it is, and they're not going to allow that. It's money laundering and all other things. So you can, if it were me, I'd like to buy puts on the idea that it's going to get approved anytime soon for passage by the U.S. government. That's all I have to say. What did Bitcoin do on the news today? It was down $800 on it, and that's a bounce. It was down a lot more than that at 99.15. This is not a surprise. We talked about it last week, and Chair Powell was talking about it. But in the stock market, the market still believes the Fed is going to do one thing, and that is have its back. It's still coming up. We're just at the beginning, as you know, of earnings season. Got to see how that plays out as well. Nothing really new in Iran versus the U.S., but Europe is trying everything it can to not enforce the mechanism that forces more sanctions on Iran. And Iran keeps saying, well, if the U.S. would go back to the treaty and remove all the sanctions, then the U.S. can talk to them. Yeah. Fat chance of that happening. That isn't going to be the case. 1413.70 was the high. The market's just sitting here against those highs on a closing basis on a weekly chart of closes. As you can see, price action has tightened up in here. The question is, which way does it come out of all of this? We'll call it congestion. The current pattern is bullish. Higher lows, higher highs. That changes if you just take out 1404.50. You could end up with lower highs, lower lows. The nice part is you know a number that it shouldn't take out. If you're bullish, and you know a number if you're bearish, you should be on alert for if it's taken out. That's two ways to look at it. Then I go to where the moving averages are. Well, this key moving average, the 18-day moving average, is right under the market at 1404.90. Now, that number is going to jump a little bit tonight because the way the 18-day average, you're going to drop 18 days ago one of those numbers and replace it with this one, which will make it a little bit higher. So that's where the support is. It's two parts to that. Support moves up a little bit, but if you get under 1404.50 and close under that number, then you have the bias down, then you have the swing line down. Very important what's going on. Ideally, the bulls can get the market up to 1429.40 and through that and not have to worry about it. For the bears, they know the number they've got to do. When you look at Bollinger Bands, even if you get through 1429.40, this Bollinger Band's moving, and it's moving at the rate of about $5 at a clip. It's going to be very close to that high of 1429.40 as I see it just visually tonight. I haven't done the math, obviously. You'll know that at 5 p.m. when it reopens, but that's a pretty solid resistance zone. In terms of momentum, it has been going down, but it's going sideways here. It can go either way very quickly. So trend up, bias up, momentum I'm going to call flat for the moment, but it can go either way depending on tomorrow's action. In GLD, the popular ETF, you've got the pattern of higher lows, but now lower highs are starting to develop. That sideways action. Momentum similar to the futures, sort of going sideways. So the trend is up, the bias is up. Should the market take out the low right here, this one of 132.41, and then close under 132.47, you could develop a downtrend in this market. So you got to be a bit careful of that too. In the popular minor stock, GDX, the momentum here is what I'm first honing in on. Both numbers today, as you can see, over 80. Both numbers on Friday were over 80, and both numbers were over 80 on Thursday. That's 3 days in a row, so we converted the market from being overbought to locking in a bull trend. The key now is, can it keep it going? You don't want to see the red line close back under 80. If it doesn't, you're putting price and potentially the upper Bollinger Band into play. Break through 2587. The question then is, do you lose that red line back under 80? If it holds, that would be interesting because the bias is up, and while that can turn the swing line down, you'd have to be under 2551 to do any serious damage to the chart. This is a real interesting time in these metals. Can the bulls really get them to pop for a change and hold? Now, something in the gold-silver ratio that we haven't seen for probably 5 weeks or so. By the way, here you did not hit that number. You have to go back to May to see when you pulled back, where the gold-silver ratio pulled back to the 18-day moving average of closes. And today the market finished under that at 91.99. That number is 92.04. That favors, for the moment at least, silver over gold, and that favors the metal complex as a whole because you want to see some of these base metals move with the gold market, so it's the metals as a whole that move if maybe they're getting that idea that, hey, whatever the Fed does is going to be inflationary. I don't know. Whatever the world does, is it going to be beneficial to the metals? We saw China's GDP come out today, and it was 6.2%. And while we'd love that in America, what if I tell you that's a 27-year low for the time frame of April through June? I'll repeat it, a 27-year low. Therefore, the trade wars are hurting. What's China going to do? Well, China will probably ease their banking in some manner. They might change reserve requirements. They might change interest rates. They'll force the banks to lend in some way, even though if you looked at the debt that's going up internally in the trillions, it's jumping rather sharply now. In the silver versus itself, the trend is up. Higher lows, higher highs. This chart, for the first time in a very long time, I'm going to say looks real pretty. Until and unless you take out 1507, you've got momentum up, you've got bias up, you've got the pattern of higher lows, higher highs. If the market is in a perfect world, you'd like to see it make a run to that upper Bollinger Band. On the way back down, two levels of support, just like we saw on Friday, the 18 and the 100-day average. When looking back at it, the market held that zone and it popped to a new high today. Can it follow through? Going home, it looks pretty bullish. Copper looks bullish going home. Higher lows, higher highs. Now it's hit this 18-day average of closes 4 days in a row, and it popped away from it today. Doesn't have the wherewithal to get to the upper Bollinger Band. It just hit the lower one, and remember my theory. First time you hit the higher low of a Bollinger Band, I think the pros come out. Whether they come out of all their positions, I don't know. It's the theory that they're lightening up and maybe everything. I don't know. But if you rally up here to 274.35, it's just what I'd expect to see. Support back at 269.15. What the bulls do not want is to see 267.25 taken out. If that happened, you'd break this pattern. In the platinum, you're into the objective. The objective was on this plate, like silver looks. But here you're at the upper Bollinger Band and the 100-day average. This is where I think the bulls are coming out. You got to 850.60 today, the 100-day average 850.50, and the Bollinger Band 840.830. I think they took money off the table. We'll see. In the platinum, on Friday, you came down. The low of the day was 1530. Look at the 18-day average, 1530.30. What you did is you lost the embedded reading. Losing the embedded reading, and I'll show it to you, here's the day before. Losing that reading often leads to price in the 18-day average, or the closest of a major moving average, the 100 days further away, coming together. Unfortunately, it didn't give you a play because it all happened on one day, and today you bounced away from it. You're out of the uptrend. You still have upside bias, but you have momentum pointing to the downside. Resistance is rather formidable at the 1589.70 level. In the dollar index, I'm going to go back to Friday. The market had a higher high, it's a lower low, momentum pointing down, bias up. Two levels of support as I see it. The 100-day average and the 18 first. The market today comes down, gets to as low as 96.37.5. The 100-day average is 96.36.5, and the market bounced away from there. It tells me that even if the market falls from here, that these two areas are still potential support zones. There's a lot going on. Number one, no trend on the swing line. Momentum still pointing down, but trying not to point down, still going down, not pointing down, and the buy is still up with two support levels. Well, that's how I'm viewing it. You know, if you like what I do here, you might like to learn how to do this all totally yourself in my charting course. The charting course teaches you swing lines. I will teach you how to draw them by hand, then you can use the indicators we give it to you. Different moving averages. I'm not talking the couple you see here. More that are much more, well, not more important, but as important. As I showed you there, the stochastics, all the tricks I know about them, and Bollinger Bands, what I've learned over the years. And yes, I know John Bollinger, used to have him on my TV shows. I pop everybody questions. Window envelope. So few people understand these, and they're an interesting tool. They're fun to learn. And the reason is the market develops layers of resistance within a certain pattern. And those patterns go no more than 3. On here I'm showing you the blue and the green. There could be a yellow over it. And they're run, number one, the difference between them and Bollinger Bands, these run parallel to the 18-day average of closes. And they're meant to be resistance points above, support points below. We can call them, depending on which way you're in the market, might even be a profit objective for you. They're not a stop-out tool. When you're done, your chart's going to look something like this. You're going to learn the Bollinger Bands. You're going to learn to use 3-day moving average of highs and lows, where to do it, the 100-day, the 45, the 18-day average of closes, all the tricks I know about the slow stochastic, put it onto these charts, and it's simple. And it's all by video. Everything I'm doing now is digitized. It's not even a DVD you get. Just go on to our site. Everything is going to work for you. You'll be getting with the course, our charting software, a $79 value. My research, a $60 a month value by itself. The course costs slightly more than those two. When I say slightly, like $20 more, not very much, right? So how do you find out? You go to our website at www.iraepstein.com, and when you get to that, go under the word education and read about it. It'll explain everything. I've got a short video there and an answering page of all the questions you might have. It takes probably a half hour a day through a couple of weeks and you're through the course. Put an hour a day in, you've cut that time down. It's not a race. It's meant that I build it in a certain way and I repeat things so that you learn how to do it. This is rote. You first see what I do, then you do the same thing, and the chart data that we give you will be the same chart data. Then in the morning videos, when you go to see them, you see this all come into action in a current chart. I'll explain what I'm seeing. You can do it on your own charts at the same time. Voila. That's the idea of teaching. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.